The thing you got to know about crypto markets is a lot of it now you hear about, projects like Hyperliquid, lots of people trading futures and derivatives. I mean, that's moving the paper price of Bitcoin, but it's not actually driving the changes in the supply and demand of Bitcoins.
People see relief rallies and think, oh, this is it. This is the next wave of the bull market. But no, only for it to, draw down even lower, right?
Usually once you lose that average sell price, historically, when we look at Bitcoin's on-chain data, we then see prices head towards the average buy price. And the average buy price for Bitcoin, I know we spoke about it on the show before, 40K.
Tokenized gold, crypto tokens backed by physical gold, they outperformed all the gold ETFs except for one in 2025.
Hey guys, welcome to another week of Tapping Into Crypto. Ted, what's going on?
Mate, not much. Another week. We're still here, Pav.
We're still here.
Still trucking along.
Well, it's a good point we're still here, right? Like, it feels a bit hard to be here right now. Well, we talked about the Bears being in the room last week. Oh, it's 2 weeks ago. 2 weeks ago.
Yeah. So I think, there's probably going to be a bit of a trend here.
Yeah.
For at least the near future is understanding this bear market, sort of how to play it. I think a big thing about it is, building in the bear market, right? Whether
Just
that
even
means...
getting your head around it, right? Because it's so different, especially if you haven't done it before. Yeah.
Exactly. And a bear market can be a good time to get educated because you don't have those emotional thoughts around FOMO and things like that. So you can really sit down and try and understand the market and understand new projects and new categories without actually diving headfirst into them. So you can get more of a holistic view of the market as a whole before things go crazy.
It's a good way to put it. So even just on that point, if anyone out there, certain things that just unsure about how to approach it, what they do differently, or how do you get over certain hurdles, just approaching the market from where you are today, just give us a comment. We always like to take a bit of Q&A. I think this is a perfect time of year to start doing it, really. Just help everyone get their head around what's to come. But let's dive into the Bears breaking the furniture in the room. I think that's how we're going to sort of frame this week's episode. We've seen fear and greed metrics. I think we've hit 5 last week, the lowest that we've seen since the last bear market.
No, so I saw you put this note in. We didn't hit 5 even last bear market.
No, we did, didn't we?
No, I saw the lowest was 6.
6, okay.
And so the last time we had 5 was sometime in 2019.
Jeez, okay.
Which is and it was 1 day.
Yeah.
And so we've already hit 5, and it doesn't feel like we should be at 5, right?
Oh, I don't know.
But it's you think back to last bear market, we had FTX, we had Luna. We haven't really had any of those black swan events, as we like to refer to them.
No, but a lot of these metrics are kind of a culmination of a few different things. They can be based on volatility and momentum as well. So if those are scoring really low, which if you look at price action right now, it's just a train just stopped moving. It's just sideways, and then every now and then it just drops, and then sideways, and then drops.
But I still think the worst is yet to come, and we'll cover that later on.
Well, let's start with the ETFs. I know we've sort of talked about this as a theme for over a year now, but we've also talked about more recently how they're an important one to watch, just in terms of understanding when's the selling going to stop, when do we see buyers potentially step in, because the thing you got to know about crypto markets is a lot of it now you hear about, projects like Hyperliquid, lots of people trading futures and derivatives. I mean, that's moving the paper price of Bitcoin, but it's not actually driving the changes in the supply and demand of Bitcoin. So when we actually see these ETFs start to sell or buy, they're actually taking Bitcoin out of circulation or adding it to circulation. So the important thing is it's actually changing just the supply-demand dynamics of Bitcoin, the scarcity versus oversupply. So right now we've seen $6.18 billion US in Bitcoin outflows since November last year. January was 1.6 bill. It was a little bit of a tick up from December. November was still the largest month for outflows, just on that caveat as well. I think just understanding that, where that particular segment of the market is sitting right now is a pretty good story to tell. We had the peak of the net holdings. So if we look at all the buying and selling activity on the ETFs, we saw the peak in October 2025 of about 152 billion US dollars. Currently sits today at 87 bill. So that's a 40% haircut. And it's not
an expensive haircut.
It's an expensive haircut. And one that we haven't seen these sort of levels of Bitcoin held in these reserves since October 2025. So when I'm trying to think about how the market is sort of approaching or viewing what's the valuations right now, it's almost like, well, we've pretty much retraced all the way back to October as far as the ETFs are concerned of 2025, which was basically before that pump. I think it was just after Trump got announced the victor. Was that in 20?
It was the end of 2024. Yeah.
Oh, no, sorry. I meant to say 2024. It's back to October 2024. So it's just when that Trump pump started, which was, I think, Bitcoin broke 70,000 US and just went soaring to 100. We're kind of back at those levels. So that's how I sort of measure up all the sentiment in that ETF market right now.
Interesting one. I saw this, and it kind of relates to the ETF point you were making. So, tokenized gold assets like Tether Gold, Pax Gold, crypto tokens backed by physical gold, and you're tracking the price of gold over time. They outperformed all the gold ETFs except for one, which I think was the BlackRock Gold ETF in 2025.
As in like volume?
Is in trading volume, yeah.
Jeez, okay.
How crazy is that?
That is pretty nuts.
Like, so people are now, because gold ETFs have been around since 2004, 2005. So, they got that longevity, they got that reputation, whereas these gold tokenized assets are pretty new to market, but clearly getting the adoption that we've seen from stablecoins as well. So Tether continues to print money is what I make from that.
That's a good shout. Oh man, I had no idea. That's crazy.
Yeah. Just a little side note, that one. But anyway, at the top of the show, I mentioned that we'd compare sort of what we're seeing now to previous bear markets. Yep. So in particular, looking at 2018, 2022, and now, 4 years later, we're in 2026. So I guess the key theme is, and we have made comparisons to previous bear markets before, but what I want to focus on is relief rallies in bear markets and how to spot them compared to how to pick a bottom. Yep. Because at the end of the day, people see relief rallies and think, oh, this is it. This is the next wave of the bull market. But no, only for it to, draw down even lower, right?
Yep.
So 2018, let's start there. In 2017, we saw Bitcoin peak at around $20,000 USD. And then, over that year, we saw several relief rallies, which were pretty significant. So in February 2018, we saw a 50% bounce from the initial low. April, we saw a 35% rally. And then July, we had another push higher before the final capitulation, which ended up seeing Bitcoin bottom around $3,100, right? And I think the key thing there is those swings are way more aggressive than what we've seen now. The market was significantly smaller, means volatility is easier to come by. But in terms of the patterns we're seeing, they're still pretty similar, just not as aggressive.
I remember that period because 2017 was when I first got in, and I bought in pretty much close to that top. I think it was like 17.5K I bought my Bitcoin. And then I remember seeing those bounces and rallies. I was like, oh, I don't want to miss the next time it goes past to $30,000. I was buying because I didn't know what else to do.
Yeah. Exactly. Yeah. And I think even though we've learned more over time, people will continue to do that. Yeah. But hence why we want to, explain some of these patterns. So next 2022, as we mentioned before, we had the Luna collapse and also FTX in 2022 is a pretty disastrous year for crypto, if anyone remembers clearly. Yeah,
that was a wild year. I think even around that May period, we saw Russia invade the Ukraine. So there was all sorts of stuff happening.
The Ukraine. Why do people call it the Ukraine?
Did I say that?
Yeah, you do.
All right, Ukraine.
I'm pretty sure Trump does as well.
Oh, don't do that.
Anyway, so I think we topped out around November 2021 for Bitcoin at around 69,000 US.
Yep.
Then in May, it went from about 40,000 after the Luna collapse to around 17,500. And people were thinking, that's the worst. Let's buy in at this bottom and wait for the bull market. And it did. It bounced back to 25,000. But what happened next? FTX collapse, which drew it down even further to around 15,000 USD. So that people were thinking, oh, I'm buying at 25,000, which in today's prices, a bit of a bargain.
That's right.
But at the time, dropping from 25 to 15, that's a 40% drawdown.
It's pretty much what we've seen today. I think right now, top to bottom is like 43 or 44. So that would be right now the same drawdown we've seen.
Yeah, absolutely. So what are the key things we see from this pattern here is initially we have a big drop from the all-time high. Then we'll have a convincing rally, around 20+%. Then we'll see sideways chop and, a slow bleed in the markets before the eventual capitulation event that sees us bottom out. And I think we can compare that to what we're seeing now. Like we had an all-time high in October 10th, right? Or before then, at around 126K USD. We then dropped to around 85K USD. But then we covered it, at the start of the year that we had that relief rally to around 97k USD.
We all call BS.
Yeah, but that's the thing. Like, we all kind of knew that something wasn't right in the air, and we all kind of knew that, the worst was yet to come, and it was. And so I don't think we've seen the last of these relief rallies. I think we might see one or two more in 2026. But yeah, it's just important to understand, like, what are the key things to look for to understand, have we bottomed out, or is this just, one of these rallies that doesn't really have any juice behind it?
I know we didn't put it on the notes here, but like another thing that I could call out that we tend to see in these relief rallies too is hyper reflexivity in altcoins. And that's a very fancy way of saying we see altcoins absolutely smash it. Even when Bitcoin is recovering 5%, some of these things can recover 1 to 200%. And it seems like, I'm going to miss out.
I mean, we saw it over the weekend, right?
It's true. We
XRP did like a 20% day. Pepe was doing 20%.
True. And that's very normal. And we could dive into like the psychology behind that as well. But a lot of these things, when you get into the bear market as well, and things have been trending down for quite some time, thanks to like the derivative landscape that we're in right now, people trading leverage. When all of a sudden, like we talk about when the market's topping, it's super easy. Everyone wants to be long. We just saw that in gold and silver, and that just completely crapped the bed. But also when everything's going down, everyone's like, oh, well, the easy trade right now is to short. So everyone starts shorting, but then that can also create like these little big air pockets that we just see these assets pop as well. So I'd say another thing that I think was consistent for me in previous bear markets too is everyone tends to become a Bitcoin maxi close to the bottom.
Yeah, 100%.
Everyone finally gets burnt enough by these whipsaws and they just go, you know what, I'm just going to buy Bitcoin and not care about anything else. I think even just like a sentiment check for me, like that's one of the things I'm looking to tick off the bingo list.
True.
But yeah.
Yeah, absolutely. So I guess like what are the key things we look for to understand? Is it a relief rally or have we bottomed? One things we want to see is sustained ETF inflows, right? You covered at the top of the show.
Yep.
We're seeing just consistent outflows. It's not great for Bitcoin. Creates more supply in the market. Obviously, we know what that means. The next one is probably another obvious one: macro conditions. We need to see that improve. There's so much uncertainty in the world right now, just surrounding geopolitical conflicts all across the world. There's uncertainty to do with, inflation, interest rates. Like even in Australia, like in the Australian market, you don't just raise them once and go back to dropping them. You see like several consistent rate raises. So yeah, I think we just want some more clarity around that and some more positive.
We've got a nice little snippet at the end on that as well, so everyone have something to look forward to there in terms of what we could watch next there.
We love Pav's nice snippets.
We do.
And then the last one I've actually taken from our friends at Collective Shift, and they work with Check On Chain, who's been on the show, and he looks at Bitcoin on-chain data in particular. Yep. And what he's looking at is the active investors or traders of Bitcoin. Their average price or their average buying price is 81,000 USD.
Yep.
And we're sitting 69,000, just below 70,000. So he wants to see, or Collective Shift want to see us, reclaim that price level and maintain above it, because what it means is if active traders are currently in the red, it creates a lot of sell pressure for them, because it's not just like you and me who are might be holding Bitcoin for the long term. Like these are sometimes businesses that rely on Bitcoin returns.
Yep.
They sometimes borrow money to trade Bitcoin, like in the case of MicroStrategy and other treasury companies. So yeah, that could result in some more hurting, but they want to see, or we want to see 81,000 being reclaimed. But then I know you've got another support level that you like to look at as well.
Yeah, it's again, like check on chain, like check out the website, have a play. It looks a bit daunting and complicated, but just making yourself aware of like how on-chain data is what makes the crypto space really unique compared to the rest of the markets that are out there. It's like an X-ray sort of shot. I think we've had Joe Shu on the show. He sort of explained it that way too. I liked it quite a lot, hearing it explained that way. Understanding when certain groups of people are buying and selling. So you're talking about like active traders, 80K is a good line in the sand. If we look at long-term holders, so people that have held Bitcoin for more than 150 days, you can also see that where we are right now is the average sell price for a lot of these longer-term holders too. So that tells you two things. It's like, well, if they're done, should see hopefully price start to reclaim that level and we creep up. But also says a more sinister outlook as well, that usually once you lose that average sell price, historically when we look at Bitcoin's on-chain data, we then see prices head towards the average buy price. And the average buy price for Bitcoin, I know we spoke about on the show before, 40K. So there's no time horizon of when we get there, or because we get this within 3 months. It's more of a case of, again, we're talking about just even think about yourselves, like when you buy something, if it comes back to your buy price, you tend to get a bit panicky, right? And you tend to sell it and buy it back again. Like that's just pretty normal human behavior. So on-chain data can give us these price levels of where we start to see emotions take over, start to see that sort of herd behavior kick in. And that's where it tells us right now, like 70K matters. And if we lose this, kind of opens the door for 40. So
Gotcha.
that's kind of like what I'm looking at right now as well.
Yeah, that would sting as well.
That would hurt. Yeah.
That would sting.
Yeah.
But look, it's not anything we haven't seen before.
No, it's not. And speaking of things we haven't seen before, let's just look at some of these top movers.
Absolutely. You mentioned it before.
Yeah.
Altcoins have these, pretty aggressive swings, but even in bear markets.
Yep.
What's at the top of the bill here?
Seems to be a lot about AI and stablecoins as a narrative is kind of what I took away from this. I've been seeing this ticker get around for so long, Pippin, and I thought it was like a celebrity meme coin. I thought it was like Scottie Pippen. I'm probably going to sound like an idiot, but yeah, I just thought, oh my God, are we still doing celebrity coins? But I looked into it. It's actually pretty interesting. So I think just with the recent advent of agent AIs and agentic AIs and Claude bot, I think it's referred to as, it essentially is just a meme coin that's an AI agent. So its whole preface is that it lives on X or Twitter, whatever you want to call it, engages with the community, buys and sells tokens, and that's it. Like it's almost just like a bit of a thought experiment, just to see if we can get a bit of a community going around it. Just that sort of idea of something autonomously operating. What does that look like if it's basically trading as well? So I thought that's pretty interesting.
So it's basically just like a little character that has its own profile on Twitter, and it's like its own avatar that just autonomously posts itself. And okay,
if you look into it, I think there's actually I don't know his name, but someone who's pretty much sort of fathered certain AI ways of thinking, and I think even is involved with BitTensor. He's the one that basically coined it. It's a ChatGPT generated image as well, so there's a bit of lore there, I guess, if you look hard enough. But yeah, it's up 135% in the last 7 days, so I don't think lore matters when something's up triple digits. Or maybe it does. So I thought that was pretty interesting. And then also coming in at third place was BitTensor, so that's like a bit of a family favorite AI project from circa 2024 onwards. Saw that really hit its stride and kind of go flat since late 2024, so it's interesting to see that back in the fold. I think just with the AI narrative in the broader macro right now, maybe that's why people are looking at AI stuff again with a bit more confidence. And then lastly, in second place, we had Stable, which is just all around that narrative of, okay, if everyone's looking for assets that are going to have real world application, well, their whole thing is we're going to bring payment rails via stablecoin networks. And they had just a mainnet upgrade. So, potentially a bit of just a narrative that they're, just improving their infrastructure.
So they're a network for stablecoins. Do they have any current stablecoins, like the big ones, USDT, USDC?
So I think it's all those, but they basically settle on their own chain in a stablecoin. So for example, if I sent you money on Ethereum, I'd pay you in ETH, right? So I'm kind of exposed to the price movements of ETH and having that risk.
Yeah.
They've launched USDTO, which is their native gas stablecoin. So when you pay someone, it'll use money for gas, which is probably something everyone's a bit more familiar with. You go to a bank, you get charged bank fees in dollars.
So you have to adopt their own stablecoin?
You do, which, So again, it all comes down to adoption again. Like, is this something that will be abstracted away and businesses will just use as like a settlement layer? Time will tell. But, they're
I don't fully understand that, because I could send you USDT on Ethereum, which means
you'd have to use ETH. So you'd have to own ETH.
Oh, to pay the gas fee,
You don't have to own a asset that could go up or down to do the transactions. So see if the market likes it. I know Tether has sort of got a similar thing going as well. So and Circle as well. So I think it's just a flavor a little bit of how payment providers want to move into the future. But yeah, that's pretty much all I saw. Some other notable ones I thought in the top movers, Morpho, if you've heard of them at all.
Morpho, yes.
16% in the last 7 days, but they're a lending platform, and essentially they're providing the backing behind of Coinbase's lending products right now.
Okay.
So I think people are just trying to find, again, just that utility market, like what actually makes sense.
Yep.
But I would just call out there, the tokenomics don't look too crash hot on that one. There's no real use case for the token as of yet. That could change. But that's pretty much what I'm seeing.
We got Pepe in there as well.
Yeah, Pepe.
17% last 7 days.
Yeah. That's pretty much it. Asta, 19%, just kind of following that whole Dex perp trading narrative, which is still running hot. But yeah, that's pretty much all I'm seeing at the moment.
Yeah.
Another thing I call out too, just to sort of loop back to understanding where we are in the bear market and how the market's perceiving risk. There's actually a ticker that you can go check out on just Google or TradingView if you have it. It's called Crypto Stablecoin Dominance. And what that basically does is it shows you what is the percentage of the market sitting in stablecoins. And the way to think about that is they're not in crypto assets. They're either sidelined, it's dry powder on the sideline waiting to deploy into assets. But it also gives a great indication in my perspective, like what's the risk tone of the market? Because essentially if this dominance chart's going higher, and you don't have to do too much analysis here, is it pointing up and to the left, up and to the right, sorry, that's a market de-risking. Well, that's pretty much what it's been doing for the last 6 months. Again, if we start to see this trend reverse and we start to see it go lower, that's also another good way to understand the market's more comfortable to go risk on. So stablecoin dominance, recommend just tracking that yourself if you're wondering like what's this very simple way that I can understand how the market is perceiving crypto right now. That's an easy way to keep tabs with it.
So by the looks of this chart, we were at about 7% dominance back in, August last year when things were a little bit hotter.
Yep.
Now we're sitting at about 13%. Do you know what this got up to in the last bear market?
It was, I believe, 15%.
Okay.
15 to 16. I have to double check, but yeah, about there.
Right.
So we're 75% of the way of like where it got to at its previous highs. But I think that's a bit hard to understand because this time around we've got a lot more stablecoins just staying in the ecosystem. Like they're not just going. I think we spoke about this ages ago. Like in the past, people would come to crypto and then leave crypto, whereas now people come to crypto, they have stablecoins, they're kind of happy to leave them parked in thanks to like real world assets and things like that.
Yeah.
So the landscape's a little bit different. But when we look at this, I'm more interested in like the trend. Like, is it pointing up, sideways, down?
Yeah.
That kind of can be like your really like just broad stroke way of viewing risk in the market.
Yeah, right. Well, I would have thought like given, the greater adoption of stablecoins this time around, we would be higher in terms of dominance.
And it probably could go higher this time.
Yeah.
Yeah. It still hasn't crossed the last highs, but I wouldn't be surprised if we do for exactly that reason. And then we sort of see it swing down. So we'll see.
Well, Pav, let's leave it there.
That's a wrap.
And
Just don't touch me.
And touch base or check back in next week.
Yeah, that's good. But again, guys, any questions, throw them at us. This is a time of year to just ask anything. It's never a silly question out there. So, all right, see you next week.
Thank you.